So every time in a Malaysian in-person tournament, you will have a token Singaporean team, and they will often win the finals, and then all the Malaysian will then lose in the finals. So perhaps this time things will be different. Okay, so the thesis from OG will be very simple. We'll just be proving one thing, and we will prove it to the fullest end, hopefully. So we're proving that the Nvidia market would burst before 2030, and therefore organically, Alphabet as the one that is just a far more viable alternative for a lot of investors to go towards would just naturally and organically have greater market capitalization than Nvidia. I want to first set the context as to why is it that it is likely for the bubble for Nvidia to burst. And the first thing I want to set here is that what is the nature of Nvidia and how does this growth looks like. This framing is very important because it's able to explain later on why is it that it is likely that this bubble will burst. First is that the inception of the spurt and the exponential growth that Nvidia has is by virtue of it having the kind of processing power and the kind of chip that was needed at the time for the large demand of Bitcoin mining. This means that by virtue of this, there was a sudden spurt of growth of Nvidia in itself. The thing is, later on, post the whole Bitcoin and crypto phase, Nvidia was able to capture the market opportunity to pivot towards AI processing unit, and because of its original established structure, because of it being able to cater towards Bitcoin mining, it was able to pivot to this quite well, and it was able to penetrate and dominate this particular market. The comparative of Alphabet here is that it's quite different. It's that number one, it's a far more stable and consistent kind of growth, and it has far more of a stable actor to fall into. Which think this looks like Google, which is often it looks like Alphabet is able to have is that Alphabet has full ownership of a lot of the technology as well as the services that kind of being shown by this kind of Google services in itself. So it means that Alphabet isn't really hedged on what are the certain types of market trends in order for it to grow. Rather, its growth is quite sustainable and is often quite available in itself insofar as Google still exists. Also secondarily, is the idea that Alphabet does not rely, it's quite self-reliant in the sense that it has its own TPUs. So comparing Nvidia's GPUs, where they use a lot of the GPUs for processing, but they often only use it to design and then they sell it to other companies. Alphabet itself is a vertical integration in which it's able to own its own TPU and then process it and then market it to the other services that exist within Google in itself. So bottom line, it's able to explain why the diversification of market of Alphabet is one that is clearer compared to Nvidia. Also, so this means that at the end of the day, Alphabet just has a far more trajectory of a sustainable growth compared to Nvidia where it doesn't. Why then it is likely that this bubble will burst? For that POS? Okay. Why then this AI bubble is likely to burst? So as explained, Nvidia often is only able to have some form of growth when it's able to capture certain forms of market trends. But I think another context is also quite important, which is that Nvidia is only responsible for the design of the chip, but a lot of these profits are only accrued via selling it off to other actors. So this looks like selling it to OpenAI then using the chip, getting it from Nvidia, and then using it within the server farms, and this is how Nvidia gets their money. Here's where the problem starts. The problem starts when you see that right now, Nvidia has paid OpenAI to only exclusively use Nvidia chips. This means that number one, you create a false valuation as to what the value of this Nvidia chip is going to be. Also secondarily, it becomes very economically harmful and non-sustainable for Nvidia in itself to continue to do this. Why is this true? Because it means that now you're spending more money than you're actually earning, because now you're spending this OpenAI to ensure that you secure some kind of market. So essentially you're creating an artificial kind of market and creating an artificial and inflating the valuation of your particular product in order for you to secure some form of standing within the market, and we explain that it's just not profitable and not good for the long run in itself. The next thing I will explain is why then there is a trajectory for this thing to burst. I will explain in two things. First, the kind of market trends that exist, which explains the incentives for investors to pull away from AI. And second, what is then the tipping point to prove the capacity of these investors to even want to pull away from this AI, to pull away from Nvidia to begin with. The first trajectory as to why this bubble will burst is because investors are able to see that number one, that a lot of the value of this Nvidia is one of a artificial inflation by virtue of Nvidia in itself doing this. But second, they're also able to identify that these kind of circular deals that exist between Nvidia and OpenAI is not going to be the one that's particularly profitable, and they don't really see the kind of ROI that's going to happen in the long term. Also thirdly, is that they see that Nvidia in itself does not really have their own independent infrastructure in order for them to diversify the market, or in order for them to house the kind of future profits that they're able to get. Meaning there's already a large chance of speculation that already exists when it comes to the trajectory of growth of Nvidia in itself. Also secondarily, we also see a large trend and rise of the hard limits and regulation in terms of generative AI. This means that a lot of the time, there's going to be a trajectory of a ceiling of how much you're able to process AI, or how much you're able to innovate AI to the point where you are garner a lot of profits. This means these are stopgap measures in order to prevent Nvidia from continuing to grow. So the bottom line here is that we're proving is that there are particular incentives and market trends to explain why there is a stopgap of a growth for Nvidia, but sure that, yeah.
It seems this analysis is self-defeating. If Nvidia is funded by circular financing within the tech industry, then why would regular investors matter when it comes to its valuation?
Okay, so the valuation still matters because it's still about the confidence of the investors that are able to do things like, number one, determine the market value and the kind of share and the kind of stock that Nvidia has within the market. So we think that these are the metrics that you ought to judge from. It's just giving you context as to why is it that investors will feel this way, right? What is then the tipping point of investors then pulling away? We think that right now we exist in a boom market. So we see a lot of the evaluation of currency in a lot of your smaller countries becoming higher. We see that a lot of people are actually doing quite well economically right now. Here is the context, which is that economies go through cyclical growth. Insofar that right now we're in a boom cycle, there's also a trending towards going through a recession because of just economics and stuff like that. So this means, because of recession, it means that investors have to now pull back certain funding of their certain portfolios, and given that there is an incentive for them to pull away from Nvidia, it is likely or not that Nvidia's market will therefore burst. Why then the alternative is likely to be Alphabet? Because number one, we've explained that Alphabet has a much more stable growth, but also second, we don't have to prove that Alphabet will have a substantial amount of growth. We just have to prove that Nvidia bubbles will burst. Therefore, the likely organic alternative will be Alphabet.
Calling upon the leader of the opposition. Here.
The microphone.
You will have to ask it quietly.
Okay. Hello. Oh.
Switch it on.
Oh, there's a button.
There's a button. There's a switch on the top. It should be one color.
Hello.
Oh. Hello.
Hey.
Oh my gosh. Okay.
3.
I want to look at this debate in terms of a few things. Firstly, like what creates the investor confidence for Nvidia versus Google's TPU, and secondly, based on their business structures, why it's unlikely that Google's TPUs or Alphabet will be able to outstrip the pace of Nvidia when it comes to market cap by 2030. So moving on to the first area, where we look at the idea of the AI bubble, I think this directly engages with opening government material. The thing is, the harm that they're talking about, or the risk they're talking about in this case, is symmetrical, right? At the point where the AI bubble bursts, yes, there will be a negative effect for Nvidia because their graphic processing chips are being used for AI, but simultaneously, the Tensor Processing Units that Google is using is also being used to train AI. So it's up to them to really tell us why this hurts Nvidia uniquely more than it does actually hurt Alphabet. But I'm going to go into my positive material and directly explain why Nvidia is better insulated from the AI bubble burst in comparison to Google. Google. A couple of lines of analysis here. One, we think that tensor processing units are fundamentally used for different forms of AI functions than general graphic processing units, right? We think TensorFlow is particularly effective when it comes to training machine learning models, neural networks, and is generally used in more niche cases, for instance in academics. So for instance, when I had to do my stupid thesis for my poor professor, I ended up using a machine learning model where I came up with a neural network using TensorFlow to kind of get it to work, right? So the point we are looking at here is that TensorFlow has a fundamentally more niche usage. Secondly, comparatively for GPUs, they're not really just used for AI. I know like most of the people here are tech pros, so I'm also a gamer, and I really love my GPU. Right? The reality of the situation is that even if the AI bubble bursts, there are many other use cases for GPUs that are just not symmetrical to TPUs, right? You use GPUs for many things such as autonomous vehicles, to the retail market when it comes to GPU. And there are about like 6 billion people in this world. So yes, there is going to be a hit to the sales when it comes to GPUs when the AI market bursts. But there's going to be a couple of billion retail consumers out there, and symmetrically a lot more companies out there who are still relying on GPU for their normal functions. So the simple calculus is this: insofar as your sales comes from millions of retail donors, millions of corporations, versus TPUs, which are used in far more niche cases of machine learning, academics, as well as research, we argue that the revenue of Nvidia is still going to significantly outstrip Google when it comes to the sales of TPU units. Ergo, we think that this will have a positive impact on Google's market cap that isn't symmetrical to Google. Yes?
Has the massive run-up in Nvidia's valuation been because of autonomous vehicles or because of AI?
Sorry, the question is whether it's because of AI or autonomous vehicles. My point is Nvidia has a diversified basket of users. And this diversity is what insulates and de-risks Nvidia, which is something that Google cannot rely on. So that's my argument coming from opening up. Yeah, okay, next. They came out and gave us what I think is a pretty good model of how Google works, right? So the argument here is that Google has a vertically integrated system where you kind of have to opt into the ecosystem in order to gain the benefits of using the TPU. So this is similar to what Apple does to you Apple users out there right now, right? Once you get Apple, you can't really go back to using anything else because your entire life is on Apple. What is the difference between this model and the GPU model, right? We think that Nvidia model is more of a plug-and-play model where they are able to insert their product into any stage of the value chain or any stage of the usability chain of the user when it comes to the GPU, right? Use it all the way from Bitcoin mining towards creating AIs as well as playing Counter-Strike on your PC, right? And we argue that this has a couple of benefits that Google will have to do a lot of things to catch up to, right? One, we think that adoption of Google's system is just going to be significantly slower than Nvidia every time there is a new business event or a new business opportunity. Because in order for you to benefit from using the TPUs from Google, Google has to first get a bunch of underpaid computer engineers to develop a whole ecosystem for you to then vertically integrate into that. Comparatively for GPUs, you just need to find like one use case and your money starts coming in, right? Your revenue starts coming in. So if I am a revenue conscientious investor, I'm more likely to look at GPU both in terms of short-term returns as well as in terms of stability of income, because there will always be a point in the value chain in new events where I'm able to get value out of the product. So using this simple calculus, we argue that yes, their model is stable, their model is great, but it's going to take more than 5 years for them to catch up to Nvidia. A couple of reasons why, and this is where I'm going to do an analysis of why I think this is going to happen. One, we think that Google has already been slow to the AI race for a lot of reasons. Firstly, they screwed up the initial project. Secondly, Gemini sucks, right? And thirdly, now they're only starting to do hardware. Comparatively, sorry, I didn't mean to offend. Nvidia comparatively has been making graphic chips for the last, I don't know how long, right? They have all the hardware, they have all the expertise, and they have all the talents. Insofar as Google isn't buying over Nvidia stuff yet, which isn't happening and likely isn't in the next 5 years, because Jensen Huang is rich, loaded, and will probably try to keep his computer engineers because they're making so much money, we argue that it's unlikely that without that technological advantage, that head start when it comes to developing hardware, which by the way takes tens of years to develop, right? You know, developing one graphic card isn't just slapping a bunch of plastic together. You need to put together all the different silicon chips using this fancy-ass machine that Switzerland makes or something, Joel spread knowledge there, right? And there are like 2 of these machines in the world, right? And they take like 10 years to make or something. So we think that when it comes to TPUs, okay, maybe they're easier to make and they're cheaper, right? But Nvidia has the market share, they have the inertia, and the products, and they have the whole machinery chain in place to make sure that they can churn out those chips to continually meet the demand of consumers. So we argue that on a competitive scale, who can scale better whenever there are new events? Again, we think it is Nvidia. Who can better retain market share? Again, we think it's Nvidia, right? Because conversely, the downside of using an ecosystem environment to keep people in is they go all out when they go out, right? If I'm a really dissatisfied Apple user and I'm done with Apple, I'm not going to keep one part of Apple. I'm just going to throw the whole Apple away and go back to Android, right? Because otherwise, every time I want to transfer a photo from my phone to my iPad, my Android phone to my iPad, it takes like freaking forever, right? So we argue that that's also a risk that Google has to deal with that Nvidia doesn't have to deal with, right? So on those points, I think already it shows quite clear why Nvidia is just a more anti-fragile product that is more appealing to investors. But there's one last layer of analysis to this, right? Which is that many consumers are already very, very used to using Nvidia, right? Like, we have been using for years, right? And we argue that they need time to learn how to get used to Google's entire ecosystem. And this is where the ecosystem model again works against them. Not necessarily in terms of adoption, but time to adopt, right? Because you have to learn the whole new system in order to adopt Google's TPU unit and make any sort of value out of it. Ergo, we think that's going to take years, right? So where does this really leave us at the end of the day? We don't really think that TPUs are necessarily a bad thing. We don't really think that tensor processing units are objectively worse than GPUs, but we argue that based on market structure, based on de-risking and diversification of products, and based on the model, the business model that both Google and Nvidia are using, Nvidia's model is going to keep the advantage in terms of market cap for the next 5 years. Go website opening opposition.
Calling upon the Deputy Prime Minister. Here we are.
Okay, Liwen, take a mic back.
Okay, can I'm going to do it like this just in case I like move away from it. Can you still hear me if it's like this? Yeah? Okay. The last time I argued an AI case in the finals, I lost to a Singaporean. Let's hope this one's a bit different this time. Let's talk about two things. Number one, why was it likely for the Nvidia bubble to burst? And secondly, why Alphabet become a more viable alternative? Integrated response to the opening opposition very simply. I want to first flag out the biggest problem about opening opposition argues. A bulk majority of the opening opposition case is an argumentation about why Alphabet simply cannot catch up with the level of growth and market capitalization that Nvidia currently has now. We at Open Government broadly agree. We don't think Alphabet can significantly catch up if Nvidia continues a trajectory within the next 4 years. Here's the key tipping point in this debate. One OG posits to use a very simple case that within the next 4 years, the AI bubble will burst and Nvidia's capitalization will shrink drastically to the point at which it falls below Alphabet. Because we want to know, looking historically, Nvidia's growth was very exponential and recent. Given the fact that a lot of the alternatives that Elo mentions in terms of graphics cards and autonomous vehicles were already things Nvidia did in terms of GPU. Then you need to ask yourself, why necessarily did Nvidia's capitalization explode over the last 5 years? The reason being is number one, when you first had the impetus to start mining Bitcoin, that's when Nvidia started to buy mass for the GPU. But then crypto started not being very significantly popular anymore. What did happen was then a massive pivot towards AI generation and using those same GPUs that you once used to mine Bitcoin into mining AI generation. That means the key thing that exploded Nvidia's growth was the exact kind of high-powered processing GPUs that are required to do things like mine Bitcoin and have generative AI. The problem is, at the point at which the AI bursts, maybe Nvidia won't die as a company, but it will stay significantly smaller when the primary consumer base of Nvidia goes back to being these low-demand products. So think about Nvidia 10 years ago. Pretty decent company, but not as big as the large shareholders within Silicon Valley like Google and Meta. Oftentimes what happens is their market capital will be a lot smaller. What is a comparative to that Alphabet, which has a stable model and probably is more immune to an AI bubble bursting because of their own vertical integration, is unlikely to survive and maintain at least a decent market capitalization. This may not be as big as Nvidia is now, but it's still substantially big because, guys, Google is a big company. But also necessarily that Nvidia's market capitalization just shrinks drastically beyond the size of what Google is right now. And I'm just market capitalization is like Google. Alphabet predominantly holds other forms of tech investments which I am not smart enough to know, but predominantly it isn't just a Google company. Okay, why necessarily therefore would the Nvidia bubble burst? There are three things in this part of the speech. Number one, why is the Nvidia market structure largely unsustainable? There are three reasons here. First, a vast majority of Nvidia's sales and proceeds and valuation is predominantly based on sentiment about how successful generative AI will be within the future. So I want to note here, generative AI is still something that is significantly important to the status quo. But the overall aspects of how generative AI could be hasn't been fully explored. The current valuation of Nvidia is a valuation based on the potential growth of generative AI, not where Nvidia is currently now. So all of this current evaluation growth is relied largely on levels of sentiment. Secondly, there is a limited product to back their valuation, which means while Ern See explained was critical and didn't receive engagement from leader of opposition, they have limited ability to have the levels of infrastructure that is required for them to push this level of valuation of their company, which means company valuation very big, but actual ability to push out product and push out generated CPUs at the scale in which their valuation is there is slightly lacking behind that. Third, circular funding props up their popularity. When you look at their deals with OpenAI and their circular levels of funding, this necessarily means that they are backed by themselves in natural ways. So they won't contest that this necessarily doesn't matter about investors. But circular funding is not the only way Nvidia gets its market capitalization. Yes, it is a very flimsy way it does that, but the vast majority of other instances where the normal investors does take place. So if Nvidia's bubble will burst, maybe their circular funding doesn't get touched, but every other source of funding in terms of their investors gets pulled out, which is why necessarily their market capital shrinks significantly. So they can't just engage and say that, if it's circular funding, therefore it won't go away. This means necessarily it enables Nvidia to have a larger valuation and the success of the company necessary to denotate. Note that markets don't let this go on for very long. And you look at every other bubble that has formed within the status quo. Look at the dot-com bubble of the 2000s and the housing bubble of 2008. Oftentimes these bubbles lasted for about 2 to 3 years. Maybe give it the benefit of the doubt. The AI bubble will last significantly longer. It's already been about 3 to 5 years. We say within the next 4 years it will hit a critical mass tipping point in which the bubble will burst. Why necessarily will the demand of AI fail? 3 reasons. First, government regulation oftentimes curbs the expense of AI. Governments are getting smart into keeping out how regulation necessarily happens. When regulations happen, this curbs the extent of AI and definitely curbs the extent of which AI can necessarily grow and therefore limit the amount of money that can be gained from AI. This necessarily makes investors think that this is no longer a strategic investment moving towards the future. Secondly, an innovation cap. While this is speculative, it is unsure as to how much more innovation can happen. We predict that there will be a cap towards innovation, which will limit the amount of growth and also the amount of money that we can gain under AI. Third, market cycles. The economy is bound to hit a recession within the next 4 years due to multiple market cycles entering boom and bust instances. The real instance of this is, upon a recession, investors start re-evaluating portfolios and where they're likely to hold their money. The first place they cut is an unsustainable, unpredictable market that they cannot predict whether their product actually matches the valuation. That is likely to be Nvidia. So upon a recession where individuals have to start pulling out their funding, this is the key point in which Nvidia's market share starts to tank. What happens therefore when the bubble bursts? When the bubble bursts, you will see a mass deportation of funds away from Nvidia. Individuals start moving their funds away, and the market structure just starts shrinking exponentially. This significantly means that Nvidia is unable to promise the same level of chip deliverance, continuously put out the same level of high-tech innovation that they're likely to do, lose a lot of their capital and lose a lot of their promises to do so. Because a lot of Nvidia's new currently is based on their valuation size. That means Nvidia is leveraging the fact that they are big in order to make riskier and riskier deals with a vast majority of other AI companies. The problem is when this bubble bursts, all those deals go to naught and you're unable to capitalize fully on them before 6 years.
Google has been hit by antitrust regulation in Australia and the EU. Who wants to say that Google won't be broken up by the time of 2030 and you don't have any more ability to do these kinds of things because vertical integration is a monopoly?
Cool. Google has been a large antitrust demon for a long time. Given the fact that they've lasted multiple years without having this, I don't think it's more likely for Google to be broken up within 4 years than Nvidia breaking as a bubble. If you want to prove that, be my guest. Why necessarily will Alphabet become a viable alternative? For a couple of reasons. Number one, the stability and reality of their market. Based on the fact that Alphabet also produces non-AI based tech companies, a burst of AI bubble will not significantly impact Alphabet to the same extent, given the fact that they have existing structures. And first, the ability for Alphabet to exist beyond things like AI. Secondly, they do exist as an alternative chip provider. So assuming there's still some market for AI exists, there's a clear purchasing alternative. They're able to extend their revenue long term because they can use their own internalized structures instead of relying on Nvidia. But finally, TPUs are engaged in a more sustainable learning. So all is right that TPUs are used to more machine learning than generative AI. The problem is generative AI is where the bubble is, which is if generative AI goes first, TPUs are able to largely sustain Alphabet through generative ability because those things are more long-term and more niche in terms of machine learning. All this simply means that they will likely be bigger simply by 2 reasons. One, they are largely more sustainable in their ability to maintain current market capital. But number 2, the likelihood of Nvidia failing as a bubble are reasons why they are likely to solve.
Take the mic and then keep it there, and then when you guys want to speak, then you don't need to keep passing the mic around. Yeah. Thank you. Without further ado, I'd like to call on the deputy leader of the opposition. Here we are.
OG does not discharge its burden with respect to the motion. Motion requires them to demonstrate that this bubble is going to burst somewhere between now to 2030, and that Nvidia will not be able to make any sort of recovery. That is what they have to also discharge, but as a burden, but they've not actually done that. Why would it burst in the next 5 years? Observing a bubble exist is quite different from proving that it will burst by 2030. The makings of the 2008 Great Financial Crisis was already found in the 1997 Asian financial crisis. Why is that the case? Because when property markets in Asia and the bubble burst in Asia, where did investors go for a safe haven property investment? They went to the United States. And that is the beginnings of the subprime mortgage crisis. 10 years were the lead up into that GFC. 10 years it took to get any sort of bubble bursting for the dot-com bubble. But what's in reality here is that these guys don't recognize that there is an actual physical hardware asset and a set of softwares that Nvidia actually has, which makes their stock price actually backed by something more than simple blind gambling and speculation in property investment. Yeah, right? The claim they make is, but like TPU, like all this is speculation on the potential of the GPUs under Nvidia. It's also equally true with TPUs. The market hype in recent times, yes, it's cheaper, but it's also something that has limited applications as a result of the vertical integration strategy that Google is trying to use to gain market dominance in the entire industry. The whole purpose of locking people into the cloud computing system and making certain features only accessible as a premium feature is something that is part of their business model, and they're trying to do that. Obviously, maybe CEO's extension might be something to do with how antitrust is going to happen and Google's going to do something like this. But what I would point out here is, again, you think about it, this particular court case is still going on in the European Union, and on top of that, they're still going to appeal that case. I'm not sure how you guys can prove why that's going to actually result in any meaningful shift in the next 5 years. Good luck proving that, yeah? So let's talk then about this idea around what happens if the bubble bursts. So let's take them at their best. Okay, fine. The bubble bursts within the next 3 years, and and all this happens. The reality is that market corrections happen all the time. The last market correction that happened to Bitcoin, everyone thought it was the end of Bitcoin. No thank you. What happened then? Within the next 2 years, it reached its next astronomical high. Yeah? So even if the bubble bursts within the next year or the following year after that in 2027, that doesn't necessarily mean that the stock price will not recover because of people believing in the asset, right? So if it is true that people are speculating over this, right, then in this instance, given that Nvidia has a strong track record on computer chips, given that Nvidia has a strong market presence in the software that you need to use as a developer in order for you to leverage and maximize the use of these particular graphic processing units, then you're far more likely on the balance of probabilities to restore market confidence in an event that you actually have market corrections. It is unlikely to actually be something that takes a massive hit to your stock. But compared to this idea of the TPUs, what happens when you are having all these TPUs? The TPU bubble is slowly starting now, precisely because in status quo, people are looking at it going, ooh, it looks shiny, very sexy, and it's cheaper. But the problem is that they don't realize that they are hoodwinked into basically buying out the top cloud computing software to actually do this. And Google's going to pass on the cost of the development of the software platform that they will use to rival the CUDA, which is the industrial standard that Nvidia has, that AI developers use anyway. So to be perfectly clear, what happens on the other side of the house is the TPU bubble starts now. And that's more likely to also result in some form of market correction in the future. I know I said 10 years maybe from now, that's when it will burst. But the point I'm trying to make is by their own logic, the TPU will also similarly, the bubble will similarly burst anyway. So let's be very clear about this, they just don't win that part of the debate. Okay, let's move on then. I want to talk about what exactly happens in status quo with respect to the CUDA software. So the CUDA software helps programmers make use of GPUs. Obviously, that means that AI developers have become very accustomed to it because it's the industrial standard. They've trained for it over years. What happens on the other side of the house now is that they have to convince tech companies to now adopt a new platform that Google has developed on top of this particular TPU, because TPU is going to be something that is very difficult for you to leverage and fully optimize its use and get the highest value rate of return for that particular investment as a company, right? All of those things are things that they will have to absorb as a risk for tech companies. Why would they want to rock the boat when they are all trying to downsize because their profit margins are at an all-time low? Yes.
So doesn't circular financing between Nvidia and its customers imply that for the vast majority of companies, capital expenditure on AI has been a massive cash burn?
It is, but the difference is that robotics, the different applications that come from this, robotics, humanoid robots being used to take over social services, the investment in autonomous vehicles and all those things, those are things that require you to use the software, CUDA, to develop and test various forms of problem-solving models that AI can actually implement. Meaning to say that it is an infrastructure and the software is more resilient and less replaceable. Obviously, on their side of the house, TPUs are becoming popular, but Google hasn't created a corresponding software platform to actually optimize it. And Google, on their side of the house, Alphabet has been trying to vertically integrate, meaning to say lock people into their ecosystem. So they're going to try and get you to buy all the additional stuff and then try to get you to convert into the Google Cloud Computing software to get the best use of Gemini and all of these particular TPUs. What happens on their side then is that these particular TPUs end up becoming a very big obstacle. So there's a lot of inertia for people to switch, a lot of inertia for AI developers and companies to do that. I want you to think about this. How did Symbian, most of you here, I think you're a bit too young, but Nokia used to be the smartphone guy. It came out with something called Symbian OS. The iOS and Android OS was able to displace that only because the App Store and Google Play was a lot more functional and easier to build apps on for app developers. That's how it became the industry standard. I don't know what these guys are standing for the GAF team. I think they're all just very confused.
Without further ado, I'd like to invite the Federal Government.
Ladies and gentlemen, boys and girls, you learned about Securities and Exchange Commission and mandatory arbitration contracts. Now you learn about GPUs, TPUs, and the AI arms race. This competition has been nothing but educational. Let's go. So, two very simple extensions. One, why demand for Nvidia chips is going to fall within 5 years. Two, why Google will win the AI arms race, and explain why Google's success necessarily comes at the cost of Nvidia's. So, first, why is the demand for Nvidia's chips is going to rapidly fall? My basic observation to contextualize this point is that Nvidia is currently valued at 40 times its annual earnings. So, if I buy $40 of Nvidia stock, I'm essentially only getting $1 worth of annual earnings in return. I'll need to assume that it's doing really, really well. The problem is that Nvidia's current share price assumes perfection in market dominance for a long period. Why is this market dominance unlikely to be sustained? One, because there's a profit incentive, a powerful profit incentive for other companies to in-house chip production. Because when you do not need to pay an external producer who is profit motivated, that means your production costs lower. And Google is an example of that, but Google's not the only one doing that. The second is that China wants to de-risk its reliance on Nvidia chips because for China, a massive country with huge amounts of talent, reliance on Nvidia chips is a matter of fundamental geopolitical concern. And unless you believe 1.3 billion people do not have the wherewithal to develop these chips, I think it's very likely that Nvidia's production dominance within AI is going to be broken. Second is that we don't think demand for these chips, even if Nvidia's dominance is going to be stable. What we see happening in the status quo is companies are engaging in capex, capacity development or expansion, to use the non-finance bro phrase. They are front-loading massive purchases of these chips so they can stockpile them in the future. The point is at some point they're going to have to stop, because at some point you stop stockpiling and start using your money to actually develop those products. So it's unclear that the massive demand which we've seen happening is actually going to be sustained. Now the response we get from the other side is that Nvidia is so diversified. What have they got? Autonomous vehicles. Yes, autonomous vehicles are being developed by dozens of different companies using lots of different bespoke chips. Unless you think in 5 years' time, autonomous vehicles will overcome the problem of, when you run over a living human being, who exactly is responsible for that? You're not going to see a giant explosion in demand on that front. They say robotics. It's been around for 4 decades. They say Bitcoin. Bitcoin mining is no longer profitable. So, realistically, Nvidia is still an extremely specialized AI chip production company. Contrast this to Google. What are Google's multi-billion-dollar revenue streams each? Number 1, Google Search. Number 2, YouTube. Number 3, Google Cloud. Number 4, Android and Pixel. And number 5, a long shot bet on Waymo and autonomous vehicles. What this suggests is that Google's lack of market concentration means that if indeed Nvidia's, quasi-monopoly on supply of AI chips get broken, Google will be in a much better position compared to Nvidia to weather whatever financial storm results from that. The last reason why we think Nvidia's demand is going to fall, thank you, is because we don't think AI is that transformative to begin with. We have hit all sorts of technical limits, right? The problem with chip production is that at some point you can't make your chip smaller or more efficient. At a certain size, quantum effects start to dominate over macroscopic effects which you need for your chip to actually work. That is why Moore's law, the notion that transistor size keeps going down, no longer holds. We also think people have realized that for AI, you need a human in the loop to check stuff and make sure it's correct so that you're not liable for selling people faulty products. There's been a huge backlash against the use of AI in really low-level jobs because it feels incredibly personal. People now don't go to tourist companies when your brochures are made using AI. So for all these reasons, I just do not think Nvidia's demand is going to be sustainable. What we heard from opening opposition is, but the bubble will be sustained. A couple of reasons why we don't think this bubble will actually be sustained. First, it's a very highly transparent market. Everyone knows about what's going on. The real estate market wasn't transparent in the same way before the financial crisis. But also, yes, it's true that some things like Tesla and Bitcoin have irrational valuations for a long time. But that's because the people who buy this stuff have cult-like messianic followings for these particular things. There is no one building shrines to Jensen Huang the way they are building shrines to Elon Musk. And also, they said, well, after market corrections, we bounce back. No, market corrections often just eliminate irrational players in the market or massively downsize them, as the dot-com bubble did. So for all these reasons, we just do not think this valuation is sustainable and people will see through this. Why will Google win the AI arms race? Number 1, what is the big limiting factor in generative AI getting better? It is not actually chip size or efficiency. It is access to training data. Because when you have data, it answers questions better. It does not hallucinate. Your liability goes down, right? People are able to use it in many more functions. Is there a company in the world which specializes in collecting data and giving people access to data on the big squidgy data pool called the internet? There is. Its name begins with G, it ends with an E, and the middle is Google. So, they will win the AI arms race. Go for it.
Google's still better than that. Hello? Google's still better in China, which, the other one isn't.
China is not most of the world. It is big, but Google still is the biggest data company in the world. That is my response. Okay, so what this means is that Google's Gemini, which currently, by the way, outperforms ChatGPT, and actually sent someone into a bit of a minor tizzy in the market recently. Those of you who trade will have noticed. But if you don't explain kids, don't do that. It's a bad idea, right? So we suggest that the evidence bears it out that Google already, the biggest data company in the world, has the best training data and will be able to win the AI arms race. The second reason it will win the AI arms race is because it's doing the best job at vertical integration right now. Gemini is doing well using Google's own bespoke chips. It doesn't just mean that Google doesn't have to pay the cost of those chips, it means it can design its chips to fit the particular architecture of the neural network it happens to use. That means it does not have to pay for customization costs from other external companies. So Google is likely in the next 5 years to at least do very well in the AI arms race. Why is it that it's doing well must come at the cost of Nvidia? Well, because it's not getting its chips from Nvidia. If the AI market becomes dominated by Google, if it becomes dominated by a vertically integrated company, which by definition is not reliant on an outside supplier, so long as you believe Google does well in the AI market, this is assuming the AI market becomes huge, it must come at the cost of the world's current largest supplier of AI chips. What have I shown you? Maybe it's a bubble, maybe it's irrational, but certainly Nvidia is going to be outcompeted. Second, Google's good at AI, like really freaky good. For those reasons, propose.
Calling upon the member of the opposition.
I think it's a good topic. We switch that.
Everyone was trolling, we're not talking about antitrust. The first thing I'll talk about is why AI adoption increases. The second thing I'll talk about is why there are other uses of AI. And the last thing I'll talk about is how we challenge Google. The first on why is that AI adoption will increase. I want to note here that the problem in the debate currently is that we talked about why is it that AI will, the AI bubble will not burst now, but it's not clear as to why it's sustained into the future. The first thing that I want to mention is that AI will increase into the future. The reason for this is that currently the AI productivity gains have not manifested in the workplace, and this is where the largest manifestation of AI will happen. This is generally because executives are hesitant to reform the workplace to suit the extent of AI productivity gains, because currently it just requires a lot of capital for you to entirely reform the workplace and restructure everything. That requires a lot of layoffs, and those are things that just generally very expensive. You buy tech and stuff, that's just generally very expensive because of and investors are unwilling to undertake this because it's high interest rates from bad economic conditions that exist at present. But as opening half already talks about, currently market conditions will continue to change. Therefore, we want to note here that there's currently sustained interest in the AI market anyways. This looks like 5 billion being invested in the AI market and trillions more that exists within stocks, right? Therefore, this means that at the end of the day, there is still currently increased interest into AI. That means that AI will the benefits of AI will still manifest in the future. The next question then is when will these benefits manifest? The first thing I want to note here is just some random spec that anyone gave me, which is just that AI currently at its current stage is currently developed based on training data. The problem is that that's not currently how we want to develop AI. The goal at the end of the day, in order to achieve the most useful form of AI, which will be your general artificial intelligence, right? Of which that it widens the scope significantly from narrow AI, which is generally a lot more limited. What this looks like is that you probably require AI to train AI. The problem with that is just that currently this is not yet attainable, but we're probably going to reach that in 2026 and 2027, where you currently have enough data centers, and the construction of data centers are probably required for you to get to that point, right? The first thing I want to note here is that in order for you to get to that point, you need more data centers so that you can get AI to retrain AI. The second thing I want to know is just that you also need some time to continuously unpack the black box until you get to the point at which AI is able to train AI. That requires a bit of time. But what this then proves is that in the future, currently we're still building data centers, but in the future when the data centers are complete and done and will happen because of the kinds of interest and kinds of money that's invested within AI, that fundamentally means that you will just get more AI in the future, right? Your generative AI will just look better when you get to the point of which you reach general artificial intelligence and that becomes the dominant form of AI in the market. That means that you just get more AI in the future. At the end of this, you should believe that AI will be integrated and continue to integrate growth. Plus, this bypasses the bubble that exists in opening half. The second thing I want to talk about is what other uses of AI are there. The first thing I want to note is what exactly is Google. I think I want to note here is that yes, it's true that Google has many different arms, but it's also true that the most amount of revenue that Google gains is largely from its search engine, SEOs, right? Search engine optimization stuff. It looks like how you're able to get money from Google because it collects its data because you input everything into the search engine, right? That was the primary means in which Google had the most amount of market dominance, and the primary means in which Google was able to make the most amount of money and gain the most amount of prevalence because people needed those things to search and access the internet. The problem now is that AI is currently substituting this. How is this being substituted? It looks like how people are just directly asking ChatGPT for things and this is largely ChatGPT is going to be preferred because it just gives more personalized answers. Its answers are generally better compared to the models that Google raises. So even if it's true that Google does raise some sort of model, right? Like Gemini is generally qualitatively less good. I want to note here that I'll talk about later on why is it that Google is just generally not as good when it comes to production of AI chips. But the second thing is also just that even if it is true that Google is able to has different arms, right? I want to note here is just that AI will continuously be integrated into multiple ways as well. This looks like how the current integration of AI exists in every single form and every single app, right? It looks like how literal governmental services involve AI. This looks like how your phone chat, like WhatsApp literally has meta AI, right? Those are just multiple ways in which AI will continue to remain resilient. Therefore, this means that like AI will still exist. But the second thing I want to note here is, again, AI is just not about LLMs, right? There are other uses for AI. I want to note here that opening half does explain this, but they don't tell you like why are these things important. The first thing is why it's important is just because like I want to note here that there's a lot more funding into other areas of AI. This is like autonomous vehicles, which generally are a lot more like important because states recognize the importance of these things because of the fact that like you just have autonomous vehicles are just generally safer because you bypass the issue of pedestrians hitting each other, you bypass the kind of human errors that exist in the system. Therefore, there's incentive for states to want to invest in those things. But secondly, it also could do like military purposes, right? Just the fact that like the kinds of chips that you use and you put inside your robot dogs that ST Engineering currently uses, right? Those are the ways in which Nvidia will currently continue to remain prevalent, and that's where the chips will currently exist, right? And that's where your AI will remain prevalent. I also want to note here that the military kind of purposes that you get receive quite a bit of funding as well. So therefore, I've proven to you that firstly, there's already there's already incentives to invest in other forms of AI that Nvidia currently dominate. I want to note here that Google doesn't receive that kind of level of attention because Google, again, they don't sell their chips elsewhere, and their chips are mainly specialized towards the Google ecosystem. Therefore, it's very difficult for Google to remain dominant. The last thing I want to note here is how do we challenge Google? The first thing I want to know is just that they're just generally better. They have first movers advantage, they have a monopoly, they have dominance over other firms. The second thing I want to know is just that the kinds of the chips are just literally qualitatively better. The scale of processing ability is almost 300 times that of like a normal Google chip, right? The second thing I want to know here is just that you need like chip designs in general, like the kinds of technology and the kinds the kinds of like chip technology and designs are ones that are exclusive to Google. I want to know also that Nvidia also exclusively owns like contracts by TSMCs of high-end production chips. Yes, the low-end ones is not necessarily exclusive to Nvidia, but because Nvidia holds the controls the chip design software and technology, right? Nobody can design the chip the way that they can, and that's how they are able to establish TSMCs. I want to know also that Nvidia is likely to diversify the ways in which they reach out to TSMCs, so they don't just concentrate within one country. Given the existing geopolitical tensions, they're likely to diversify to other areas. This means that Nvidia remains resilient as a whole. The last thing I want to note here is just that Google will end up losing market capitalization because it just really does not sell its chips. At the end of this, you have to believe that firstly, Google is likely to lose a lot more market share, they would likely to lose the AI race. And secondly, just Nvidia's chips being qualitatively better means that the kind of impact, this activates the impacts on how is it that more companies are going to use the Nvidia chips in general. Weigh this on two things. The first is on the first is just on how prerequisite Nvidia is compared to Google, right? The kinds of technologies that Google produces remain locked in within the system, whereas Nvidia just remains much more extensive. Therefore, we also win on scale on that front because the kinds of technologies that exist will continue to permeate throughout the rest of the world. Ignore the last thing I also want to note here, right, is that the kinds of training data that CE mentions, right? The first thing is just that the training data is the internet lah. The internet literally is your whole database of data. The second thing I want to note here is that the kinds of databases that they have are specifically for ad revenues. That's not something that's necessarily useful towards AI training anyways. The kind of information that you have, everybody already has.
Reminder to observers, do not make any noise when people are speaking. Without further ado, I'd like to invite the government witness.
Madam Chair, I'm going to structure my speech based on two lectures. Hopefully both these lectures will be exactly 4 minutes each. First, I'm going to give you a lecture about valuations, like how should we think about valuing a company. And second, I'm going to give you a lecture about AI, like how should we think about Google's AI initiatives. Alright, so first, how should we think about valuations? Let's imagine that I have set up two companies, right? I set up an in-person debate company, and I set up an online tuition center. Imagine that the in-person debate company and the online tuition center make the same amount of annual revenue. Should we price their annual earnings the same if we're stock investors? Obviously not. We should pay more per dollar of revenue to the online tuition center because the online tuition center is going to scale over time. Whereas the in-person debate center is kind of limited by the fact that Chin only has 24 hours a day and there is actually only one Chin, right? And I'm going to apply this framework to both Nvidia and Google. How should we value Nvidia? We agree that Nvidia's revenues are diversified, but we disagree that Nvidia's valuation is diversified. Nvidia has 4 sources of earnings: 1 crypto, 2 gaming, 3 EV, and 4 AI. Number 1 to 3 trade at roughly what finance bros would call a 10x multiple. So for every dollar of earnings generated by these 3 verticals, investors pay about $10 per annual revenue. For AI, and this is factual, you can check me on this, investors price every dollar of AI earnings from Nvidia at a 50x multiple. For every dollar of earnings, investors are willing to pay $50. That kind of averages out to the 40 times that Ashish told you. Why? Because they believe that AI revenues will grow at a spectacular pace. It is priced for perfection. So that's what Ashish means when he tells you there only needs to be a small perturbation in order for that valuation multiple to compress. It doesn't even need to go to 0, guys. It could go to something like a normal 10x valuation and Nvidia is still cooked. Because mathematically, if you go from a 40x multiple to a 20x multiple, your market cap halves. That's how math works. Why do we think there might be perturbation? Or even a crash? We don't even need to prove a bubble, huh? Because companies today are not fully rational. They spend a huge amount on capital expenditure because of FOMO. What is my proof for this? Look at how much money Mark Zuckerberg spent on the metaverse. Does anybody here, show of hands, use the metaverse? Yeah, I thought so, right? And they immediately pivoted, right? And what's the real problem here? The real problem is shareholders are putting these companies under immense amounts of scrutiny because they are asking these companies, you are burning through cash reserves but nothing to show for it. That's why CO loses this debate. This debate isn't about AI adoption. This debate is about AI monetization. That is to say, within the next 5 years, is there a pathway for the capital expenditure that all these companies have been plowing into AI to be monetized in a way that justifies that spend? I think an estimate by Jamie Dimon says something like, in order for AI to be monetized, it needs to generate something like $40 of profit for every human being ex-China in the world, something between $30 to $40. And that's a pretty crazy number when you think about it. Like $30 to $40 from everybody in the world for every single year in perpetuity. That is what the market is currently pricing. And that's why the next 5 years question is important. Because right now, investors are demanding that companies show the goods, show the cash. Now, so this is a question, right? Where does Google's valuation come from? We told you it comes from 6 places. 1 cloud, 2 Google search, 3 YouTube, 4 Android, 5 moonshots on Waymo, and 6 AI. 1 to 5 make a lot of money, but they trade at a much lower multiple, something like a 40 to 18x multiple. Now, 5 trades about a 19x multiple, and 6 trades at about a 30x multiple. So even if, right, you don't believe what I'm going to tell you later about AI, at least believe this, okay? It takes only a little perturbation in the AI capex cycle for Nvidia's valuation to get crushed from like 40x to about 18 to 20x. But that little perturbation will only crush Google's valuation from something like a blended average of 19x to roughly around 12x. But Google already makes just more cash. So even if Google is on a slightly lower multiple, it just makes more cash multiplied by 12 is probably going to be more than a small amount of cash multiplied by 20. That's kind of the math I'm trying to do. I hope that resonated with the folks in the audience. I'm trying to make it as simple as possible. My second lecture is going to be about AI. Why do I think even if you don't believe the first lecture, Google will still win the AI race? Ashish told you that Google has an AI data advantage. Closing tells you no, because you can bootstrap. Okay, here's the thing about bootstrapping, by the way, if you're not familiar, is using AI to train other AI, using AI to generate synthetic data. The problem is that synthetic data is basically a derivative of primary data. That is to say, the quality of the synthetic data is contingent on the initial data that you already have. And for all the reasons that Ashish told you, and I'm going to add an additional reason here, the amount of benefit you get from bootstrapping is magnified by that base layer, because the more bootstrapping you do, the more the hallucination kind of like repercussions out. I'm again trying to make this as like straightforward and layperson as possible, right? But what are some other advantages that Google has? Google has lots of dank data in other languages, stuff that a lot of other data companies don't. You use Google in Chile, you use Google in the Philippines. What does CO tell us? Oh, actually no, sorry, my bad, y'all. What does OO tell us? You don't use Google in China. China. Okay, my response is, Nvidia also doesn't sell many chips to China, right? More Threads recently IPO'd in China, and China has SMIC. Why? Because it's a national priority under Xi Jinping that they want to nationalize chip production. So even your POI is kind of like a wash in this debate, right? Because Nvidia is also cooked in China, right? Even if Google is cooked in China. So anyway, back to Google. You know what Google's really good at, y'all? Google is world class at monetizing AI. Why? Because they are fundamentally an ad company. They are going to be super good at using Gemini to cook your brain. If you think about it, like when you talk to your friends, right, have you not noticed that all of a sudden on Google Ads or YouTube, suddenly they advertise you exactly what you're saying? Like, I found this out recently, and I'm going to curse you all, right? I'm going to say right now, holiday to Japan, holiday to Japan, holiday to Japan. I guarantee you when you go on, at least some of you in the audience are going to get advertisements from Expedia about holidays to Japan. Imagine how much you can cook your brain further if you are talking to Gemini about your relationship problems. And then Gemini is like, have you tried this depression medication? Have you tried this engagement ring company? Like, I'm being actually quite serious. I'm like, pretty darn worried about this, right? Now, their response might be to retreat back to their POI, which is regulation. Okay? So my response to regulation is, I think Ashish pointed out that the problem with the antitrust lawsuits in Australia wasn't about Google's monopoly position, it was about directing users to certain sites and their contracts with Google. It was a very specific piece of antitrust legislation that wasn't actually hugely impactful for the stock price. I think it fell by something like 2 to 3% when the news broke. So for all these reasons, I'm incredibly proud to propose.
Now calling on the opposition to go to the debate.
This is going to take a while. Firstly, if the bubble will collapse. Secondly, who benefits if the bubble does not collapse? Firstly, does the bubble collapse? The first group of mechanisms I want to take out is the trust me bro mechanisms provided by government bench. They say that it's a bull market, they say that market cycles are bad, they say that the dot-com bubble bursts in 3 to 5 years, but these are all incredibly speculative. You should not buy any of these. The reason why you should not buy any of these is because the greatest stock market traders in the world misrepresent when the bubble is going to burst. So for example, George Soros burnt millions of dollars trying to short the dot-com bubble in the 1990s, but actively failed because it did not burst enough in time. Warren Buffett had to answer to his investors why he did not decide to touch the dot-com bubble, even though he vastly misrepresented the amount of time in which it fell. All this explains to you that even the best investors in the world cannot accurately determine when a bubble is going to burst. You should not buy this team, and all of this kind of claims should be cast in a veneer of skepticism. The second group of mechanisms I want to take out come from closing government. The first mechanism they give is that there are 40 times annual earnings, which are bad because investors want to pull out. What they miss is that the problem is that the AI bubble is primarily financed by private capital, AI companies, and circular financing. It is not financed by individuals. 50% of all revenue that goes into Nvidia is funded by companies within the space that use their chips, that buy their chips, for example, that use them for data centers, which is the reason why circular financing is called circular in the first place, which explains why they are not daunted by the 40 times valuation. The other 40% are invested by private capital. These are companies that have portfolios full of AI companies that are actively invested in the success of this space. Therefore, investors are not deterred for this reason. The second reason they give is that China will dethrone Nvidia. There are 3 responses. Firstly, Nvidia is by far the strongest AI chip producer in the world. It produces chips like the B800 chip is valued at, the computational rate is around 3,000 teraflops. China's best chip produced by Huawei is around 200 teraflops. Clearly, there's a massive difference in terms of the ability for you to do this. Secondly, China is actively locked out of TSMC, which is the best chip manufacturer in the world. Only Nvidia has signed exclusivity contracts with TSMC. Only Nvidia can access the best kind of chips. But lastly, China is also locked out of producing its own chips domestically because the best lithography firm in the world, ASL, is a Dutch brand that is banned from selling its machines to China by the Dutch and US governments. Therefore, Nvidia will not be dethroned for this reason. The third reason they give is that the AI is not transformative because it has not hit technical limits. I'll go over this later. The final thing that they say is that Google is going to win because it has all the training data in the world and that scrapping data is derivative. Firstly, I would note that even if scrapping data is derivative, it is still data, it still contributes to your ability, and presumably things like OpenAI and a billion other AI firms in the world like Anthropic already have a massive head start over Gemini. So this is not a reason to believe why they will be dethroned by AI, by Google's generative model. Secondly, there are data brokers around the world that actively do things like scrape data or actively sell user data to these kinds of companies, which means that this is not the case. The last mechanism they say is, Nvidia can't innovate any further because Moore's law does not hold. The problem with this is that Moore's law is that the number of transistors in a microchip will double every 2 years. There are only two-year cycles until 2030. This is not a reason to believe why Moore's law does not hold. But secondly, even if it does not precisely double, you should still believe that computational power will still expand drastically because you can still cram more chips into a small amount of space. So the mechanism they give fails. The last ditch effort that they have here is to explain that this is not about AI adoption, it's about AI monetization, but our mechanisms explain why it's the case that Nvidia will continue to be at the top of AI monetization, which I will explain now. What was our extension? Before opening. Closing.
On circular financing, if a pineapple farm owns a pineapple tart company, the pineapple tart company owns a pineapple farm, are they harmed if no one can sell pineapple tarts?
I'll explain why we sell a lot of pineapple tarts under our side of the house. Cadence explains that the AI bubble will continue to grow and will not pop in the next 5 years for 3 sets of reasons. The first set of reasons is that there's more integration into the workplace. The AI has not been integrated into workplaces now for 2 reasons. Firstly, it's because of high interest rates that deter expansion and restructuring. However, interest rates are falling and will continue to fall into the future. Therefore, there's more integration. Secondly, it's because AI productivity is not sufficient in the status quo, but clearly that will continue to increase into the future. The reason why you should believe it will continue to increase into the future is because AI spending and expenditure covers data centers that will last until 2030. So those projects have already been financed, which means that advancements in AI in the interim amount of years will take advantage of the greater amounts of memory and greater amounts of computational power, which explains why AI will drastically increase. This means that inevitably, these firms will adopt AI into their workflow because competitive pressures force them to adopt AI. So if one firm adopts AI, this explains why it's a tipping point for a lot of firms to adopt AI, which explains why these companies who have selfish profit incentives will actively buy into AI. The reason why you should buy this intuition is to think about ChatGPT in 2022 and think about the state of ChatGPT now. Clearly, the growth of these models is exponential. It scales with the amount of memory and chips that you will get, and we explain that Nvidia is the one that provides these chips and is instrumental in its growth. The second set of reasons is that there are other users to AI. The US military will continue to develop AI for military users. Self-driving cars have propped up Tesla's valuation for decades. It will continue to buy Nvidia chips. Artificial general intelligence is the most transformative technology in the modern years, and governments will keep innovating towards that. So this will explain why the hype continues under our side of the house. Lastly, there's incentive to compete with Google. So even if you believe that everything this team says is true, the problem with Google is the vast majority of its profits come from Google Ads and its search engine. AI is a disruptor in this space because if you are able to AI your problem, and this means that you do not need to go through Google, the AI gets to collect your data, and obviously people will use AI insofar as it's more customizable, more personal, and it's better able to provide you your accurate results that you want. Which means that even if everything they say is true, our reasons scale with their reasons. The stronger Google is, the stronger incentive AI companies have to compete with Google, which explains why AI hype will continue. This explains in one sweep why it's the case that the AI bubble will not pop, why it's the case that people will keep investing into AI, and it explains why Nvidia is stronger. Why is Nvidia stronger? This is the part of the debate where we really run away from the debate, and we get no response from this team. Even OG tries to concede that OG does not even attempt to contest that Google will beat AI on this Nvidia on this field. The first reason why Nvidia will outpace Google is because it controls chip design and it is dominant now. Secondly, OG says that
Nvidia is leveraging its existing size for more funding. We think that this is a good thing insofar as you're able to get exponential amounts of funding, which allows you to supercharge your first mover advantage. It allows you to do things like being able to poach researchers and engineers. It allows you to increase your economies of scale. This beats opening opposition, who explain why Nvidia is strong now. We prove why Nvidia will be stronger into the future. Lastly, let's take out opening government. They say that the bubble will burst because there's increasing regulation. This is not true. Trump has deregulated AI, and China will continue to deregulate AI, which means that the US has competitive pressures to maintain its lead in this field. They say that it only designs chips and it's only grown in the short term, but clearly this is not a problem because Nvidia is the strongest firm in the market now.
Gracias,